TGI friends, it's Friday for markets, and this is Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. I just placed my Amazon order for a car cover, salt, and hand warmers as we are here in New York City, braced for a whopper of a winter storm this weekend. No idea if any of this stuff will arrive in my house in time, but I know this. Natural gas prices have surged 40% since Monday in advance of this impending storm dump. So to those in the path of the storm, stay warm and stay vigilant. While it's brutally cold outside, it has only been hot. It has been very hot and spicy, I should say, in markets this week. Let me refresh your memory of what you endured since coming back to the markets on Tuesday. On Tuesday, stocks suffered their worst day since October after President Trump's insistence that the U.S. take control of Greenland reignited worries of a global trade war. The Dow lost 871 points, the dollar weakened, and the 10-year Treasury yield touched its highest level since August. But as soon as Trump said at the World Economic Forum in Davos on Wednesday he would not use force to obtain Greenland, that right there was the ultimate buy signal for traders. Since then, the buy-the-dip crowd have returned in force, chowing down on their favorite momentum names like NVIDIA, AMD, and Tesla. The VIX Volatility Index is back to the more subdued levels seen before Trump's latest Greenland push. If I had to sum this wild week up in markets, here is how I would do it. The renewed volatility has reset investor positioning and sentiment and dispelled complacency. I think this opens the door for a good earnings season, which picks up next week in force to be reflected in higher stock prices. Now, this is not a market call. Don't yell at me on X, just some common sense here. Speaking of that common sense, that is sweeping through Intel's investor base, who is getting way too complacent on the company's prospects. The stock is getting hammered because of weak guidance and, frankly, weak execution by the Intel executive team, now led by Lip Bhutan. Even considering Intel is now backed by the U.S. government and NVIDIA, it borders on absurd to see this stock up 150% in the past year prior to this latest sell-off. So much going on here. Here on the Opening Bid Roundtable, Stephanie Guild, Robinhood Chief Investment Officer, alongside Yahoo Finance reporters Brooke, DiPalma, and Ines Ferré. Stephanie, dip buyers are back. Is that the right way to play this?
Certainly earlier this week, I think it's kind of come to fruition over and over again that when you have some of these scares that, impact potential trade, that it ends up being something that gets worked out in the end. And so that can certainly be a dip buying opportunity. But I think in this environment, it's much more of a dip buying opportunity on single names that may have been thrown out with the bathwater, so to speak. That might be in a place like software, for example, where maybe numbers turn out to be a little bit better than expected and sentiment is overly done. Whereas you have an Intel where sentiment had gotten very, very high for a company that still needs to dig its way out.
Stephanie, I mentioned in my super long intro today that earnings season likely to be a positive for the markets. But beyond that, there's some potential negatives here, chief among them who the next Fed chair might be, and that could very easily be coming out within the next week. How do you think the market would take it if we don't get the likes of a Kevin Hassett?
Certainly there's been an expectation that the Fed will turn or stay dovish. And so if it isn't somebody who can stay along that course, then I think it could end up being a negative. But I think more important for the Fed is just getting the confirmation that it will remain somewhat independent from other parts of the government. And I think that is the most reassuring thing for the market right now.
Brooke, like I mentioned, a lot of the investors they've waded back into the markets and they've got back to their favorites. These are AMD, Tesla, NVIDIA, and frankly, many other momentum names in technology.
Definitely what we've seen over the past few days, taking a look at the YF Interactive, just over the past 5 days alone, we have seen a bit of a mixed picture here. Tesla and Meta seeing some of the gains. Tesla up about 1.7% in the last 5 days, Meta up 5%. NVIDIA trying to hold on to the momentum, but Micron and ASML also doing well. Micron up 17%, AMD up more than 15%, but Apple and Broadcom moving lower. Also Netflix, we got that recent announcement now, the Netflix co-CEO set to testify before Congress under that deal of Warner Brothers, also Palantir moving forward. And so there's lots of dynamics that are happening within this market that certainly is giving traders, warranting traders to sort of pick and choose where exactly they go. But Tesla still seeing some momentum, holding on to what we've seen so far year to date. Also taking a look at that, Tesla down though about 1%.
And as I know you're prepared to talk about on gold, but let me just get right to what I mentioned just now on investor complacency. I think it's good that some of this investor complacency has been taken out of the markets. It might be painful, but Ines, I think investors have to remember nothing goes up in a straight line, especially a stock price.
No, it doesn't. But look, the strategists that we have spoken to this week have talked about a bit of a broadening when it comes to earnings growth this year. You are expected to see earnings growth for the S&P 500 by some estimates by as much as 14%. We are seeing this tilt into cyclicals that we've seen, and that's part of the sort of story about a broadening when it comes to this. I was also part of I listened to this roundtable of BNY Wealth, and they were talking about the big beautiful bill this year that is supposed to bring down, with the tax incentives for corporations, capex incentives, it's going to bring down taxes by about 3% for corporations. That is going to help their bottom line. So what strategists keep talking about is the fundamentals are still there. Earnings growth is expected this year, and that is what is expected to drive the markets higher.
And as what's also still there is gold prices. While the dip buyers come back to markets, you're not seeing this massive gold sell-off.
No, look, I mean, gold is knocking on the door of 5,000. We're about $50 off in the gold futures right now. We saw that silver touched $100 per ounce. By the way, 5,000 for gold, this was supposed to happen at the end of the year. We are in the third week of January, and this is already happening. This is a debasement trade that is on fire. It didn't help this week that you saw the Danish pension fund saying that they were going to sell U.S. treasuries. You see Northern European funds that are saying they're going to reassess their U.S. assets. You saw India that now has the lowest amount of U.S. treasuries in 5 years. So there is this backdrop behind this entire gold theme. And now you're seeing also private investors at Goldman Sachs is saying they're not going to be selling in 2026. Private investors that are also getting in on this gold rally because they are seeing the debasement of the currency of the U.S. dollar.
Stephanie, gold is often seen as a safe haven. You and I know that. But given how far it has run the past year, the past 6 months, the past month for that matter, should gold still be viewed as that safe haven asset, or are we in I would say a gold bubble that's going to end badly soon, especially if these dip buyers continue to come back into the market?
Not to give you a boring answer, but I kind of feel like we're in the middle between those two things. It's certainly gone past a safe haven asset, in my opinion. It's become speculative, and it certainly has a lot of momentum behind it. But I'm not sure we're in a bubble yet because also it is a commodity that has supply and demand, and the supply is not as high as like a metal like silver. So I think silver has been in vogue because it's much cheaper to buy. And we've certainly seen our own customers investing in silver over the last few weeks. But I think it's something that people are going to buy and hold on to and bear out any volatility because they are holding it for a different reason necessarily than just a pure investment.
Stephanie, what have you seen? You mentioned your customers. What have you seen from them during a volatile week like this? What else is going on out there in the retail investor community besides them going back to a Tesla and NVIDIA?
They are dip buyers, and they had in the past, like during Liberation Day in 2025, they had used ETFs as a way to start getting back into the market. And we did see an uptick of that over the last week in broad-based ETFs. And as mentioned, the silver trade. But we also saw, them actually selling some of the things that have done well, like, NVIDIA, the hardware that has done very well over the last few months, and taking some shots. Like I actually saw some growing ownership in the software names that have just been very falling quite a bit.
Brooke, hit me with the Intel chart. It was not a great quarter for Intel. That guidance wasn't good, but you hopped into that earnings call with Lip-Bu, the CEO of Intel. He's no longer new. He's been in there for a while now. He owns all of this stuff. And I didn't like that they weren't able to give you clear guidance on when new customers were coming to their foundry business. I didn't hear about Apple. I needed to hear about Apple. I didn't get it. And I think that's what the market is not liking here.
Yeah, what we've seen over the past, since the beginning of the trading session and really last night is the stock down more than 13% after the company posted that outlook that disappointed the street. It wasn't as high as what the street was looking for. And we heard from Intel executives really that they're on this way. They have this tight supply moving into 2026. They said that our buffer inventory, CFO saying this, that their buffer inventory is depleted, and the mix shift in wafers towards servers, which began in Q3, will not come out until late Q1 of 2026. And so when you think about that outlook, not exactly what the street wanted to hear. And Intel, over the past few months, has been a stock that has performed well. It's up about 24.5% in the last 3 months alone, as there was lots of momentum heading into the back end of 2025. And really, this has sort of ricocheted into other names as well. Others that are moving lower today include equipment maker ASML, also Broadcom moving lower. But then on the flip side, you have Nvidia and Taiwan Semiconductor moving higher within this market as well. Some of their biggest competitors like AMD also moving higher. And so it just goes to show the impact and the reliance that the street right now has on this company as well to ultimately prove out in this AI build out.
Ines, I want to serve up a quick bit of free research for the Yahoo Finance community out there. You want to be enthusiastic about Intel. If you want to get involved with an American store like this, wait till they actually sign up some big customers for that loss-making foundry business. It's as simple as that, Ines, at least in my humble view. Intel has let a lot of people down, a lot of investors down the past decade.
Yeah, it has. And they're advanced packaging, by the way, in that foundry business. But look, to Brooke's point about the guidance, I mean, one analyst had talked about, yes, so the guidance came in weak, but it was because of supply constraints. So you kind of have to look at sort of that silver lining. Another analyst basically saying 6 months ago there was like an existential crisis with this company. Then, now they have a new CEO. They have also an investment from the U.S. government. I mean, if you take a look at what the stock has done from about August until now, before today's move, it's up 160%, not including, of course, today's move to the downside. But it is a company that has disappointed investors in the past, but it's still, some strategists are saying it's still a little bit early. Give them a pass, perhaps because of this supply constraint, that being the reason for their weak guidance.
Two things Intel's good at, under delivering on earnings and mass layoffs. They can really execute strongly on those two things. Stephanie, Brooke, and Ines, hang with me. Lots more here on Opening Bid. I'm all in on Tesla and Elon Musk for my stock of the day and question of the day. Really enjoyed listening to him at Davos on Thursday, even though his Greenland joke fell as flat as a punctured Tesla tire. Good job with the interview goes to BlackRock, a billionaire CEO, Larry Fink. It was a moment of catalyst dropping for Tesla CEO Elon Musk during a speech with BlackRock's founder Larry Fink in Davos on Thursday. Here's what I took away from Big Elon, besides that I may not live to be 150 years old. Supervised full self-driving approval in Europe could come within the next month, followed by China. 2 potential wins that support recurring revenue for Tesla. Very important there. Next up, Tesla has started robo-taxi rides in Austin, Texas without safety monitors. That also looks to be a win in the foundation for large-scale robo-taxi deployment the next 12 to 18 months. And Musk said Tesla may start selling its Optimus humanoid robots to the public by the end of next year. So Elon with some bullish callouts here, but will the street forget them all when Tesla announces what will be a weak quarter on January 28th? Let's take it to the opening bid roundtable. Ines, over to you first. What do you got?
Yeah, look, I mean, the street may be saying now, forget the quarter, just tell us how real is the future? How real are the projections for robotaxi, for Optimus robots? You saw the stock, Tesla stock yesterday jump 4% after Musk said that they basically are now using robotaxis in Austin without the safety monitor, and also the prospects of being able to gain approval in EU and in China. That's huge, and that's what the street may be looking at, is the future.
Yeah, and the quarter is likely to be weak, Brooke. And I also think investors may be forgetting of what we've heard from Ford and General Motors over the past month. Both of these companies announcing really big EV write-downs, which just is, the backdrop is such, I mean, the demand is so weak that they have to take those write-downs, and it's not getting any better for Elon. Go ahead, Brooke.
I think what we've seen is certainly this momentum, especially after that September EV tax credit ending. What we saw was a pull forward of these companies, or rather of consumers, to get ahead of that expiration. And now as we made way into the back half of the year, not only is that a headwind that's up against Tesla, but also think about Google's Waymo and the competition that they're facing there when it comes to these robo-taxis in particular, certainly edging higher, certainly gaining momentum across the U.S. especially. And so I think not only, is there an interest ongoing around EV and the momentum that we once had last year, especially because of that tax credit, and will that maintain the momentum moving forward? I think more investors are focused on the future of Tesla when it comes to these robo-taxis in particular, and also humanoid robots, which I know we'll get to in just a bit.
Stephanie, the other side of this coin is that essentially Tesla could report whatever it wants next week. The retail community is still going to love the company, and they're, of course, still going to love Elon.
Yeah, I've always said, like, whenever you're trying to analyze a stock like Tesla, you look at if you try to look at the normal things like valuation or, PEG ratios, earnings expectations, it's not about that to me. It is about, like, do you believe or do you not believe? Are you in or are you out in terms of the grander vision that Elon has? And, I do think it's fascinating with the robo-taxis and how fast I think he's become a player, or Tesla's become a player in that, because, other companies like a Waymo have been at it for a bit longer in my mind. But I do, that's really what you see. It's the most traded stock on Robinhood, besides NVIDIA. And it's something that I think people just, you can't look at the fundamentals. You can't look at technical analysis, maybe in the short term, but it's really just like, do you believe in the longer term vision?
Staying on Tesla, Stephanie, I think Larry Fink brought this up yesterday when he was talking to Elon. Tesla, if you zoom out of the day-to-day volatility, it has been a good long-term investment.
It has. I mean, it's been up, especially even like over the last few months. And it's something that I think as I said, you have to decide whether you're in and you're out. And even if you're looking at the more recent coming up, like earnings that they have on the 28th, expectations are already for them to have negative earnings, right? But then expectations are to have a really strong year in 2026 with 30% growth year over year from a very low base. So I think a lot of that is already in the stock, and it's just sort of like, how real is the humanoid thing actually starting to be sold in 2027? How real can the growth actually be for the robo-taxis? How fast can all of this stuff become a larger piece of the pie relative to just being a car company? Because comparing them to a car company, to me, is also not necessarily the thing to do.
So on the mark. All right, I'm glad you mentioned humanoids. For my question of the day, I'm sticking with my man, Elon Musk. I really enjoyed his talk at Davos and found what he said on humanoid robots quite interesting.
My prediction is there'll be more robots than people. Probably sometime next year. I'd say that by the end of next year, I think would be selling humanoid robots to the public.
A new Gartner report this week sheds light on what's coming on the humanoid front potentially. Through 2028, less than 100 companies will progress humanoid robot proofs of concept beyond experimentation, with fewer than 20 companies going live in production for supply chain and manufacturing use cases. My question is this: should we believe humanoids will be the next great investment opportunity? After all, there is an AI component to these bots. Stephanie, what say you?
It's from a personal perspective, it's a little bit scary, I have to say, but it is something that we have been considering in Robinhood strategies, for example, where we haven't necessarily been looking for companies to invest in that have humanoids in their, in their pipeline, but we have been investing in companies that will provide the eyes and the ears for robots, because even if it doesn't end up being a humanoid, I do think this concept of automation replacing humans in some way, shape, or form is not going away. That's going to be a growing concept. And so that's where we've been focusing.
Ines, I don't know why I think this, but I think you'd be an early adopter of one of these humanoids in your house.
I would definitely be an
See, I know. See, you work with someone long enough,
maybe
you kind
for
of
the yard. Maybe
for
for the yard, but not.
For
yet.
sure. For everything in the house. Can the humanoid clean? Sure.
And your Costco pizzas. It can make those Costco pizzas for you.
Can they cook for me? Yeah, of course. I'd be a huge early adopter for humanoid robots and also the robot taxis as well. But look, this year and next year and going forward, we are starting to see sort of the merging of machinery, which has been around, but also now you're adding on the AI layer, the intelligence layer. And that is what's most exciting when talking about humanoid robots in the future.
All right, so I got it right with Ines. Brooke, I'm going to guess that you're a little skeptical on these humanoids.
Brian, I'm the youngest here, and I'm skeptical. I don't think I'd want one of these in my house.
I knew it.
I think certainly for sure when you think about the future where this is going, Elon Musk is pretty convincing. He was saying that a lot of his friends have elderly parents. This was in the conversation at Davos with Larry Fink. A lot of his friends have elderly parents, and he believes that these humanoid robots will help to take care of an aging population. I thought that was an interesting point. I love interpersonal relationships. I love, talking to people. I love being the one to sort of jump in. And so I will say, I'm not bought yet, but if this is anything like how Disney Channel's The Smart House went, then we're in for something certainly that might be a little scary here. And so I'm a bit skeptical here, Brian.
All right, well, I will leave it on this. I know my mom is a big opening bid watcher each day. Mom, I will say this to you right to camera. I'm going to buy one of these robots early to take care of you at some point because, look, not to be mean, I just don't have the time. Sorry, Mom. Big thanks to Stephanie, Brooke, and Ines for joining the Opening Bid Roundtable. Stay safe if you are on the East Coast. It's going to get bad out there. Appreciate it. All right, date safe for your calendar. A big new episode of my Opening Bid Unfiltered podcast drops Monday at 8 a.m. Eastern Time with legendary venture capitalist Bill Gurley. Bill was an early investor in Uber and perhaps has the largest network of contacts I have ever seen in the VC game. And the guy knows everybody. This is one hell of a chat we had on tech stocks, AI bubbles, and the future of investing. You can watch on Yahoo Finance and YouTube and listen in on podcast platforms Apple, Spotify, Amazon, and iHeartMusic. Julie Hyman, we'll be right back.